Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now.
There's no question that 2022 was a bear market, but 2023 could be a bull market. And to try to get ourselves in the right mind frame, I thought it would be interesting to talk about how Warren Buffett thinks about a bear market and then how to react during a bull market. So I brought on somebody who knows a lot more about Buffett than I do. That is Jon Quast. Jon, how are you doing today?
I'm doing very well, Travis. Thank you for allowing me to join your channel and talk about this subject.
Yes, and speaking of, you have a new channel called Working Capital. That can be found at Working Capital JQ. I'll put a link to that in the show notes as well. And if you would subscribe to Rive Investing too, I appreciate it. Jon, give us a little bit of information about how Buffett thinks about a bull market, because I think of him as somebody who is really comfortable in a bear market when everything's being thrown out and he's going, hey, I'm gonna just pick off the best in breed. He had that deal with Goldman Sachs, and I think it was Bank of America during the Great Recession. He bought railroads when they were down. He bought shares of Apple when they were down. He seems to be really aggressive when things are down, but what is he thinking about when things are going up?
It's a very good question, Travis, and I would make a small distinction here, but I think it's an important distinction. So Buffett has said, we never have an opinion about the market because it wouldn't be any good. And if we did have an opinion, it might interfere with the insight that we do have that is good. And so what he's saying here is he doesn't believe that his opinion is reliable with the market. So he doesn't even have one because he wants his opinions to not be influenced when it comes to the stocks that he's picking. So he doesn't really have an opinion about bull market, bear market, anything like that. He does, however, have an opinion when it comes to investor sentiment. And so investor fear and greed and all these sorts of things. So typically you have fear in a bear market and you have greed in a bull market. So in that sense, yes, he does have an opinion on the market, but I think that he's thinking about it slightly differently. He's looking at the companies. He's saying, wow, is there going to be robust future cash flow here, very reasonably predicted and soon and in excess of what I'm being asked to pay right now by the market? That's fear, if that's true, in which case he's a buyer. So it's not necessarily the bear market aspect, it's the fact that he sees irrational fear in other investors. And to the same token, when he sees irrational greed, when he sees irrational speculation, he can actually make extreme decisions in those scenarios. And so what I always point out is that they call them the go-go years, if you know your stock market history. And so from 1957 to 1969, he was running the Buffett partnership. He had positive returns every single one of those years for 13 years. And it worked out to be a 30% compound annual growth rate.
And just to put that into context, I want to give a little bit of history for those of you who aren't familiar with the Buffett partnership. Buffett actually made a vast majority of his money early on running a hedge fund. He had, I believe it was a series of hedge funds that he then combined into one. And that's that series of time where he was actually charging a really high fee on the gains that he was making. But he was a really good investor, made his investors a lot of money. And then at the end of that period of time was when Berkshire Hathaway came in. So just a little bit of history if you're not familiar with that.
Yeah. And to your point about making his investors a lot of money. So let's say that you invested 10 grand in 1957, a 30% CAGR by 1969, $290,000. This is incredible returns, positive returns every single year. If that was me, I would have started feeling really good about myself. I would have felt untouchable. I would have felt unstoppable, and I would have stayed in the market. Rather, Buffett looked at everything in 1969 and said, this is a speculative market. I'm not in tune. And he gave his investors their money back, and he got out of the market. Now, was that because that's how he does in a bull market? No. That's what he does in a speculative, greedy market. He starts to become very concerned and he starts to scale back on his investments. And so to your point of the elephant gun, yeah, when he sees the fear, he'll do that. It happens to coincide with bear markets many times.
So I guess what you're saying is he thinks more about investor psychology or market psychology than what we think of as bear market is a 20% pullback in the stock market, or a bull market, here's the metric that I'm using. He's more thinking, if in aggregate, what is the feel, what is the vibe almost of the market? And do I think it's crazy and unsustainable, or do I think that maybe there's a bunch of stuff being thrown out with the bathwater and I want to go look for some deals. Is that sort of the right way to think about it?
Precisely. Yep.
So from an action standpoint, I guess one thing I wanted to ask too is he's known for making a lot of these big investments in bear markets, but it isn't like he takes 10 years off. Oftentimes the market goes up for a long period of time, maybe 5 to 10 years. Then there's typically the down market, the recession is shorter, it's more dramatic, but it doesn't last for a long period of time. So it isn't like he's just buying things during the bear market. What is he thinking about during a bull market? Because one that pops out in my mind that he added and has been, I think, arguably from a dollar perspective, his best investment ever is Apple. He didn't buy that in 2009. He bought it in, what was it, 2016, 15, 16, 17, something like that. This was not a time when Apple was an unknown company. It was very well established. It didn't, but it ended up being a really great investment. So how should we be thinking about things? Let's say the market does recover in 2023, but I get to fall or winter. We've been in a bull market. Do I need to now be worried, or do I just need to keep the same mindset that I have in January and not get caught up in the hype?
Yes, I would say that the hype, yes, I would say that the genius, if you will, of Buffett isn't so much that he's smarter than everyone else, but he seems to know himself better than he does anything else. And he's very in tune with his own emotions and his own thoughts. And he has this way of overcoming emotional responses and thinking very rationally. And I think that is the takeaway that we can all have. And something that I can say from experience, I got away from in 2020 and 2021, because you see what I would have termed irrational exuberance with so many companies. So we had the low in March of 2020. By June of 2020, so many stocks had doubled and even tripled from the lows. The rebound was astronomically swift. And I considered that to be irrational exuberance. And yet things kept going up. And so then I began to question my own analysis, and I began to get what is called fear of missing out. Everyone around me, brand new investors, people who had been investing 5 minutes had made more in a month than I had made in 10 years of being an investor, right? And so you begin to get this jealousy, greed, and even questioning your own self and saying, you know what? I'm getting in on this too, and investing in things that did not make sense to you personally from an analytical perspective. And I paid the price dearly for that at the end of 2021 and throughout 2022. Those companies that I invested very heavily in, wound up going down quite a bit. So I think that is the takeaway from Buffett is, regardless of what the market is doing, bear market, bull market, he's very in tune with where he stands, with the companies that he owns, and he's very in tune and very intentional with what he's going to do with his money. Now, oftentimes he'll start raising money in a bull market and then start deploying it in a bear market. You do see that. And I think that is something that we should all consider as well in our investing. Am I uncomfortable with things right now? Maybe this is time to start building cash. But I'll tell you what, it is hard to pull the trigger in a down market. So we talked about this before, even on this channel, Travis, about how many companies are trading at ridiculous valuation levels when you look at the cash that they have on the balance sheet. Why do they trade there? Why aren't people buying those stocks? It's really hard to pull the trigger when things are looking tough. So I would say it's easier said than done.
Yeah, and the context that I like to talk about this with, and hopefully this makes sense, is you're playing a game and you need to know what game you're playing. You can be a value investor in 2023, but if you weren't also a value investor in 2021 and 2022, you're going to lose out because you can't keep flipping back and forth and say you're a growth investor in the good times and a value investor in the bad times, because inevitably we always get that timing wrong. So somebody like Buffett, I think he's playing a completely different game than I am. Like, he has more money. He can make deals that I could never make. I can learn from that, but understanding what he's doing, what his mindset is, and what my mindset is, and what I'm doing, what I'm good at, what I've learned over the last 25 plus years investing, I need to keep reminding myself of that. I think that's one thing that you're absolutely right. is really easy to lose track of when you're in a bull market, because sometimes stuff doesn't make any sense. And one thing that I did, I don't know if it's right or wrong, but I remember having a conversation with somebody who I help manage their portfolio in kind of the down market in 2020. And I said, I'm really uncomfortable, but I'm not going to change anything because I think I really like the companies that are in the portfolio. And I don't know what's going to happen from here. And maybe that means it'll go lower. Maybe it means it'll go higher. Well, over the next 2 years, stuff ripped higher. And that was great to be holding. And then it pulled back over the last year or so. And that's been really painful. But if you are able to hold on for that ride, because that's the way that I invest, that's something I shouldn't be changing and flipping back and forth. Should I have taken more profits at the top? Absolutely. I think we can all probably say that. But now going back to those principles, and I'm more comfortable in this down markets, trying to find values, knowing the game that I'm playing and what I'm doing well, I think is hopefully a framing that comes from some of the stuff you said about Buffett. Anything you wanted to add there?
I think that's a fantastic way to summarize what needs to happen. Again, Travis, why didn't you just sell everything at the top? Because we don't get the timing right. And I think that underscores the point that you made, that we don't know the timing of things, and therefore that is what makes it even worse to be switching strategies, because invariably why did you have the strategy that you had in the first place? It's because you thought it would work until you got the timing wrong and things did not work out. So you've already proven that you're not timing it right. If the plan is good, if it's worked for other investors, then probably stick through that.
The thing that I've learned over time, and Morgan Housel has spent the last decade writing about this, but investing is a lot more about psychology than it is about being able to do numbers really well. And I think Buffett, you're right. You framed it really well, that he probably understands his own psychology and the market psychology better than almost any investor in history. That's the thing that I'm taking away, both from the last year and everything that has happened from the downside. And then also if we do head into a bull market in 2023 and things continue to go well as they have, at least in the first few days of trading, I'm not going to get too exuberant and try not to lose my bearings on where my principles are and what I'm trying to do long term and the game that I am playing. So thank you, John, for adding that context. I always like hearing you talk about Buffett because I know you've done a lot of research on him. Follow John's channel at Working Capital JQ. Follow Rive Investing right here. Thanks for watching. Leave your comments below. I'd love to hear what you think about Buffett's mindset in the current environment, and we'll see you here next time.